Hey everyone, welcome back to SumZero. I'm honored to welcome my special guest today, Daniel Piderit Hernandez. Daniel is the founder and managing principal of DPH Capital based in Miami. DPH is a concentrated contrarian long-short hedge fund focused on deep value opportunities globally. And previously, Daniel worked at a hedge fund, Inca Investments, and Jay Goldman, which is a multi-billion-dollar fund. And he began his career trading and doing options trading at Goldman Sachs. So, Daniel, great to have you on SumZero. Thanks for taking the time to talk to us about kind of your investing background and a couple names in your portfolio. Just wanted to,
Thank
it's
you.
it's always interesting to get perspective from folks. And in your case, you've got kind of that you've got that LATAM background, and one of the names in your portfolio, interestingly, is Meta, which is obviously a name that everyone's familiar with. We've sort of written about it extensively on SumZero, but again, it's always interesting to get international perspective. So, can you give us kind of your viewpoint on maybe how you think about the name from both a valuation standpoint and where you see potential growth levers? And I think one of the things that we had previously talked about was kind of you walking us through WhatsApp specifically, because I know that's kind of one of the most under monetized platforms within the Meta family of apps. So I'll leave it at that, but I'll let you get started with
Sure,
your
sure,
thoughts.
sure. Well, first of all, Divya, thank you for having me. I love what you're doing with SumZero. I've been involved for a long time. It's a great resource that I use, and that I definitely recommend. So, yeah, I feel like my background, originally being from Venezuela and Latam growing up, and then working later at a Latam focused hedge fund at Inca Investments, most previously before launching my own fund. Yeah, I think that does generate kind of a different perspective. And actually, DPH Capital is a global manager, but has a significant allocation to LATAM equities, maybe between 15 and 30% of the book is in LATAM versus, the benchmark. Our benchmark is the MSCI ACWI, which is a global benchmark, which has 1% in LATAM. So LATAM is definitely very much under the radar for a lot of investors. It's kind of an afterthought, but it is a region that is the most volatile region in the world in terms of markets, and it presents a lot of opportunities. So I feel like it's definitely a region that I like to focus on, even with a global outlook, because of the opportunities found there. Now, interesting. Yeah, Meta is a name that we've discussed, you and I, and the Meta actually was my biggest position at some point during the life of the fund. So we launched May of last year and started looking at Meta as we pride ourselves in being contrarians. Or all my biggest positions are largely contrarian names, both long and short. As Meta was kind of getting involved in all that mess and down 80% from its highs, if that's even possible. Single digit PEs. That's when we started building a position, and it became the largest position right after reported third quarter in October, November of last year, and then so it has been the biggest contributor to performance this year. As we, now kind of getting to reduce it a bit in terms, kind of reallocating some resources, but it's still a meaningful position for DPH. And yeah, of course, everybody wants to talk about and the main issues, right, with Apple, the signal loss or the privacy kind of changes at Apple, and all the competition from TikTok and Reels and all the stuff, the response that Meta has had against that, and the expense cut, the capex. Those are like the topics that most investors focus on, especially the sell side, but even buy siders as well. And so I think those are very well discussed, and I don't feel like there's much value to add there. But I think when we talk about some of the what are people not talking about, right, when we're thinking about Meta, and I think I would point to maybe three things. The first one is, as you previewed, is WhatsApp. WhatsApp, first of all, it is the most used messaging platform in the world. It has 2 billion monthly active users, which is right like about a third of the world's population, excluding China, where the app is banned. So in the second place is Messenger at 1.3 million, and then WeChat at 1.2. So WhatsApp is the biggest messaging platform in the world by a wide margin. Meta doesn't report financials for WhatsApp, but from commentary that comes every now and then, it does seem like the monetization of it's minimal, under 5 billion a year. So about like 3% of total revenues for Meta. It is a sleeping giant, and the thing is, talk about the LATAM perspective, right, is that US investors kind of tend to see WhatsApp as an afterthought, right? I think mostly is because they don't use the app. But what they fail to recognize is how vital this app is outside the US. You know, Brazil, for example, has more than twice the number of WhatsApp users in the US, or 120 million versus 60 million, with 2/3 of the population of the US. You know, India has 500 million users. Africa, countries like Kenya, South Africa, and Nigeria all have WhatsApp penetration levels, both 95% of smartphone users, you know, which is kind of crazy to think about. So be that prevalent. So, and even in some large developed countries like the UK and Germany, WhatsApp is the leading messaging app, right? So it is a big deal, much bigger deal than people here in the US think it is. I for sure use WhatsApp more than any other app in my phone a lot. So maybe that's why I appreciate the potential more. But yeah, Meta has yet to monetize this monstrous app. You know, there are definitely plans in the pipeline. You know, that's the thing. You know,
let's talk about the monetization path. And this obviously applies to their other messaging apps, you know, Instant Messenger, as well as, you know, even direct messaging on Instagram. They've said a fair bit about click to message, but what is your view on kind of the best path for them to leverage WhatsApp and their other messaging platforms better so that it starts to become a more meaningful part of overall revenues?
Yeah. So to click to message, which is really the answer to the Apple privacy issue and not being able to track, you know, people as they leave the app, really that's where click to message comes from. Is a way for Meta to keep the interaction in-house, you know, and being able to have the merchant and the user kind of, you know, meet in the platform, Instagram or Facebook, and then click to message and kind of be able to connect inside the Meta ecosystem, which, by the way, not only solves the problem of the Apple signal loss, but actually just makes Meta even more valuable in the ecosystem. Now they control the entire interaction, and that's just so much more valuable for Meta. So it's actually something that accidentally they made themselves even stronger as a company because of it. You know, so I think the click to message is a tremendous kind of evolution of their business. So that's happening more with Instagram and Messenger, etc. You know, and that's already seen tremendous kind of growth in adoption, and the merchants are using it a lot more. They like it. It's much more seamless. So all of that is starting to get monetized, you know, and then ads that come from that, you know, there's a lot of opportunity. When it comes to WhatsApp, you know, the plans there, for example, is that they recently started, like last month, they recently started facilitating money transfers inside WhatsApp for users in Brazil. So they're starting with Brazil. I mean, Brazil is WhatsApp's second biggest market. So it's free to use for regular users, meaning the cash transfers. But for businesses, they pay WhatsApp a 4% processing fee for accepting payments. And so I think this will be a game changer. As you know, already there's a lot of businesses that a lot of business happen already in Brazil through WhatsApp in terms of customer service and e-commerce transactions, which required the business and the user to jump from their interaction with WhatsApp off to a different app to transact, right? So, but now they can do it all inside WhatsApp much more seamlessly, obviously. So I think this will be a big money maker for Meta, and it won't.
Yeah, that's so interesting. I mean, do you have, so I don't know if you have any tangible examples of this, but if I'm like selling, I don't know, landscaping services in Brazil, I can make an offer through WhatsApp. Somebody can click on it and pay for me to provide those services directly on WhatsApp. And would that be like through a credit card, or was it a direct link to my bank account? Do you know how that works?
Yeah. So you set it up kind of like a Venmo account or anything like that, where you're gonna take your banking kind of information, all that. Meta will, or WhatsApp will, and all that stuff is encrypted and everything protected. And then you kind of transact within the app, within the conversation that you're having with the other person or business. There's like a little option or menu to pay or actually send money to this business. So if it's a business account, if it's just two regular people, you and I kind of chatting on WhatsApp, and I can send you money just like I can with Venmo, no charge. But if it's a business account, then Meta charges the business 4% fee for kind of facilitating it. So it's super simple, you know.
Do they do that or offer that outside of Brazil, or is
No.
that the only country that's doing? Okay.
Brazil is a pilot. They just started mid-June, so it literally just started. So this is right now contributing zero to Meta, but
Yeah.
I can guarantee, because this WhatsApp's already so prevalently used in Brazil for businesses and to deal with customers, to talk to customers, to kind of maybe give them directions or give them like shipping information, all that stuff. Everything happens through WhatsApp. All the communication happens through WhatsApp. Now it's going to be like, oh, by the way, you can also pay through here, instead of like, maybe let's jump to another app to pay or do any other way, through maybe PayPal or whatever. Now it's like through WhatsApp. I mean, it doesn't get any easier than that. Why would you now jump through another app when you can, in the same app that you were already using to communicate with the merchant, pay through there as well? I mean, it's a no-brainer.
No-brainer. Is the fee any higher for the merchant than the fee they would pay if they were, let's say, somebody went in store and bought something through a credit card? Or is
about the same? About the same. Yeah. So it's just the ability to facilitate it, the technology basically. So this is going to be huge. It's going to be Brazil. It won't take long before it goes outside of Brazil, and it's going to be a big deal. Nobody's talking about it though, but this will be a revenue contributor for Meta. And that's just one of them. I would say, if we keep going, Facebook Marketplace. That's Facebook Marketplace launched like 5 years ago, and it's accessible through the Facebook app and website, but only to users of Facebook, which had 3 billion monthly active users, right? And this is like a fantastic way for small and medium enterprise to do business in a trusted platform with access to so many people.
Yeah.
And right now on the marketplace, if you deal as a regular person, there's no cost. But if you're in it as a business, the marketplace, or Facebook is going to charge you a 5% selling fee. So think about it like it's kind of like an eBay, but on Facebook. And so Facebook will charge you a 5% fee, which is less than half of what eBay charges. eBay charges double digits. And Facebook Marketplace, I think it's still building. It still has work to do, I think, in terms of the vetting process, to work on decreasing fraud. But it's not stuff that they can do. But I think what I see in terms of promise in it is like, I think last I checked, marketplace transaction volume is only around 30 billion per year, which compares to eBay around 80 billion. So the opportunity is huge because Facebook has access to many more users than eBay, and charges a much lower fee than eBay. So again, it's kind of a no-brainer situation that the monetization is just a matter of for them to kind of get it rolling. So it's just a matter of time before it really starts to add.
I've personally used Facebook Marketplace mostly to buy used goods, secondhand goods,
right?
In a localized way. So if you're in a certain region, like you can choose what radius of you want to apply to a given type of good or service. I've actually bought stuff from folks
that's how it started, but now it's like, okay, that's how you make it popular. But how do you monetize it? Well, now you bring businesses into it, and now business can sell stuff in marketplace, and you charge the business. But this is all very new, in terms of what's happening. So again, who's talking about nobody's talking about marketplace, but you're really building an eBay inside Facebook. That's what they're doing, But they have access to 3 billion.
It's happening very quietly. The question is, can they scale it to a level where it actually moves the needle for the business?
They already have the users. That's the hardest part. That's the hardest part. So now it's a matter of like just now bringing in more businesses, which is it's going to be easy to do. They already have those relationships on the advertising side. So it's just a matter of integrating it. So I think it's going to be another big success, and it is going to be a needle mover. Just a matter of time. So that's another one.
The WhatsApp e-commerce opportunity in India is also, I think, enormous. Just given, I think that's their largest. It's their largest market. So, and everyone I know who in my family who lives there is on it all the time.
India's the number one WhatsApp user. Yeah, absolutely. So I mean, again, being able to transact inside the app, it's amazing how smartphones in general, have solved so many problems in emerging markets, and in countries that are less developed, that have less bank branches or whatever. The smartphone and being able to transact on the smartphone just solves so many problems, and these are the tool, So
Yeah.
absolutely, India is going to be another big market. So when I talk about the explosion outside of Brazil, yeah, definitely including India. I mean, for sure. So I mean, it's WhatsApp. It's that's the biggest one that I think that is not getting talked about. But even marketplace, and look, even the metaverse. Like metaverse is just seen as a joke. It's almost like people think it's just a waste of money. Like nothing's going to happen. But and yes, the investment there is going to take multiple years, billions of dollars already is. But I think the opportunity there is so large that it's just foolish to automatically disregard it. Look, Meta just sees the metaverse as a potential successor to the mobile internet, which, if you remember, Zuckerberg was one of the first ones to recognize and position for the shift from desktop to mobile, right? So if he's been right about these transitions before. You have to give him some credit, and he thinks this is the next transition. Will the metaverse actually become a thing? That's the $1 trillion question. But I'm kind of bullish on it. Not saying that I would participate in it, but I don't even use social media. So
I think you will, and the
Maybe.
reason is not because of Quest, but it's the AR glass launch that I think is the most.
Absolutely.
That's going to be I think it could be a real iPhone moment, because that's something that you don't have to be cool to want to own. I mean, that's like it solves a practical problem, which is to say, how do you bring digital information to your person through a form factor other than a cell phone? And sunglasses or AR glasses, AR powered sunglasses, are so lightweight and small and easy to kind of carry around. And of course, you have a large portion of the population wears glasses anyway. That I just feel like it's an easier. I think it's a really easy pitch, right? Like if you could buy, say, a normal pair of Wayfarers for $200, but if you spend $300, you're going to get this avant-garde technology device that's going to tell you, bring the power of the internet to your field of view. I think that's a pretty powerful message. I also think that Apple entering this space is really a very positive channel check.
100%.
The future viability.
It legitimizes the whole marketplace. I mean, look, Apple doesn't miss with its product launches, okay? Which is why they rarely come out with something new. I mean, the last thing was like 10 years ago almost, so they won't miss with this either. VR headsets are made for the metaverse, and the metaverse, that's the content, and Meta will be the #1 content provider. I think this move by Apple is very good for Meta and the metaverse. And the fact is, nobody's investing in the metaverse anywhere close to the same level as Meta is. I believe the stat is that Meta has twice the number of people working in the metaverse than Snapchat's entire employee base. Okay, they're just going to dominate it if it becomes a real thing. They're just going to be light years ahead of the competition. So look, and right now the thing is, the contribution from the metaverse is not pricing into the stock at all. If anything, it's subtracting value because
it's a drag.
It goes into the reality lab segment, which is a losing segment at the moment. So this has the potential to take Meta to just another stratosphere, and you're not paying for it in the stock. Granted, I don't think this is something that will materialize anytime soon. This is a 5-year, 10-year kind of long game argument, but it's powerful, and investors just don't want to take it seriously.
In terms of the nearer term setup, I'm just curious what your thoughts are going into the second half of 2023, given that the stock's up over 100% from its lows, which I think was October-ish of 2022, and obviously, the AI boom has sort of added a little bit of juice to returns more recently. But how do you feel about where the stock is heading in Q3? Or I guess we have to wait for the Q2 print. But what's your near-term outlook?
Yeah, look, I've reduced the position quite a bit, probably by half. It was our largest position, and of course, it has done extremely well. Look, we were buying it at single-digit PE, double-digit free cash flow yields. It was a ridiculous valuation. Now, now it's more of a market multiple type of valuation. So I think that's the thing, it's not expensive. You know, it's just coming from an extreme, yeah, it's doubled from an extremely depressed stock price, you know, so it's not like it's trading at this super rich valuation. It's not an Nvidia or something like that, which is making even new highs. You know, Meta is still well below its previous peak. You know, sure, interest rates are at a different level, etc. But still, I don't feel like right now you're paying a market multiple for Meta, and a company that has all these amazing things that we're talking about, access to 3 billion daily users. I mean, who has that? Nobody. So, you know, I think it's a stock that I still want to own for the long term for all these reasons that we discussed. I believe in just this segment stepping back and just, you know, digital advertising, increasing penetration, they're increasing e-commerce penetration. All these big factor drivers are. I want to keep Meta up top, you know, and the whole segment. So I still like owning it. You know, whether the setup for the quarter, I don't really fall into that as much, to be honest. I'm more of a longer term kind of investor. So I don't know about the quarter, but I would just take any volatility as opportunities, you know, to start adding back to the position if it goes through another kind of correction. You know, I'll be happy to add back to it because I believe in the long term. I think right now, yeah, it's closer to, let's call it fair value, if you will. But because I believe in the long term of the growth of the company long term, I still want to hold, you know, a core position for the long term, unless it gets to a silly valuation, which right now it just isn't, you know, 20 times or so.
It's far from silly. So yeah. Let's, you know, kind of looking at the other end of the market cap spectrum, you had posted a short on First Solar, which again, I think it's a name that people are somewhat familiar with. Obviously, there's been a lot that's happened from a regulatory standpoint in favor of the renewable space and the solar space. Yeah. But just paint a picture on how that first hit your radar. I think it's a fascinating story because you're short the name. Usually when people think of shorts, they think of companies that are struggling. First Solar is not exactly struggling right now, yet you're short stock. So tell us how it hit your radar and why it's interesting to you from a short standpoint.
Sure. Well, look, I mean, it just stepping back a little bit and talking a little about just the strategy of DPH Capital really is at the heart of it is to be extremely contrarian. You know, it's a highly contrarian approach to investing in securities that I believe are at some sort of extreme, either positive or negative, and being able to develop a thesis on the other side and see if it's there. You know, I'm not a contrarian for the sake of being contrarian, but I have to, you know, to really find the reason why the market has gotten wrong. And sometimes I agree with the market, you know, and there's nothing to do. But if I find a reason that I believe just the market has gotten it wrong or just maybe taking it too far, then that's when something becomes really interesting to me. And then maybe if I can develop an investment thesis and then work on modeling, you know, the kind of fair value that I consider for that stock, you know, I have certain predetermined entry and exit points for that, whether it's a long or short, you know. So for Meta, it was just, again, getting destroyed, right? So it was a matter of, like, again, catching the falling knife, if you will, you know, at that time when nobody wanted to. They were making even silly comparisons to the next AOL, you know, that's when, you know, right? Like, oh, wow, this is getting out of hand, right? First Solar is just the mirror opposite, where it's just a matter of, like, all of my shorts, you know, if you look at my shorts, are just stocks that are doing extremely well, that I believe are for the wrong reasons or for temporary reasons, mostly, you know. So I have a harder time shorting growth stocks, you know, where it's just like a tremendous growth story and it just trades at a very high value multiple. I find those a little bit more difficult, but companies that are more tied to cycles, you know, and that are more commodity-like, I definitely, you know, I can feel more comfortable in kind of pricing a fair value and modeling a fair value and developing a thesis around it. And First Solar definitely falls in this camp of, like, a stock that is extremely well loved, that has done fantastically well in the last year, you know, triple basically after the IRA, which we'll get into. And it's just a matter of, like, what that's going to come on my radar. Something that's doing extremely well is a stock that I know for a while. I've followed it for several years, and I kind of know it. It's basically, even though people want to think it's a technology company, it's really a commodity company. I mean, solar panels are completely commoditized. There's no IP really in it. So First Solar is just a matter of, and if you look at the history of First Solar and their profits are up and down, really on a trending downward cycle, you know, because of pricing, because solar panels are getting so cheap that even though volumes are growing, you know, the pricing is kind of killing them in terms of profitability. So it's just not a very good business. That's the starting point. Okay, this is not a very good business. And then the stock is just going crazy, like it's like the next new thing, really. That's where
maybe to help frame the story a little bit. What would the bulls say about the stock?
Oh, well, the bulls are going to say that this IRA, so this bill that they passed last year, $400 billion towards clean energy projects, it has a lot in it, but you know, a big part of it is that the tax credits that they're going to have, not only for the utility company or even you and I, whoever installs a solar panel is going to get a tax credit, an investment tax credit. But now to that, they added a 10% bonus if you buy the stuff from the US, you know, domestic content, if it's US. And First Solar is basically the main option because they're fully integrated and fully US based. You know, most of the solar panel businesses or industry is very China focused. I mean, China is by far, you know, the master of solar panels, and there's other places. So First Solar is the one that's positioned here. So they have like a first mover advantage, if you will, with all of this, because they're already based here. So if you are a big utility company and you're looking to set up solar kind of panel systems, and you want to get the tax credit and you want to get the boost from sourcing domestically, you're going to go to First Solar. So First Solar is kind of the only game in town because they're the biggest game for biggest domestic kind of manufacturer, right? And then on top of that, so not only do they give that tax credit to the user, but now they decide to give a tax credit to the manufacturer. That's brand new. The tax credit to the user, that's been going on for a while. This time they just renewed it, made it bigger, and added the domestic kind of boost. Okay, but then something that's brand new that wasn't a previous subsidy before this bill was the tax credit to the manufacturer. So now for manufacturing, just for making solar panels, they're giving you a tax credit, which is 17 cents per watt, which is a ridiculous. I don't even know how they come up with a number, because to give you a sense, First Solar's all-in cost is 25 cents per watt. So out of a 25 cent per watt, they're going to get a 17-cent credit. I mean, that's a ridiculous. Basically, they're going to make a ton of money, just a ton of money in terms of this subsidy. So you get it from manufacturing, you get this tax credit, and then you get all the crazy demand from the utility side, right? You know, that they're going to be kind of asking for solar because they are the main US producer, so they want to get the tax booster. So yes, the bull case is extremely easy. The bull case is, wow, they got hit with the deck. You know, if you use a poker term, you know, they got so lucky, you know, in terms of all these subsidies and all these kind of tax credits and all that stuff that's coming to them from every which way, that they should be making a lot of money. I'm not even disagreeing with that. I think that's definitely going to happen. But the reason to short it is, like, first of all, this is as good as it gets. I mean, I don't think the news flow can be any more positive than it is today. You know, not only the bill get announced, but most recently, like right before I posted the short, all the rules around domestic content, which weren't very clear, they got announced, and they basically, I mean, to make it really simple, you know, the details are in the idea and the SumZero site, but they made it much more favorable to First Solar. Let's just put it that way, right? So the stock kind of went up another 30% already. So I thought, like, this is maximum optimism, if you will, or just too much. Like there's just nothing, I think, much more positive that can happen here in terms of news flow. I mean, this is as good as it gets. And look, the bar has been set high now. You know, now if you look at all the modeling that's out there, sell side, buy side, in terms of earnings expectations for First Solar, they're at the moon. I mean, it's incredible what the expectations are now because of all this tax credit, because of the math. You know, that it seems like so easy to just put in a model and calculate it out. So the bar has been set very high. Now First Solar has to deliver, you know, and the thing is, if you know anything about the history of First Solar, is that it is a perpetual disappointer of expectations. You know, we've seen several cycles like this one before, where outside expectations get built, around some sort of policy assumption, because this is not the first time that we're seeing solar subsidies. So the entire industry is based on a history of many subsidies and policy actions that have happened before. So this is just the most supercharged one we've seen. But we've seen this before where a lot of stuff gets announced and then it doesn't end up happening the way it's supposed to happen. And it's just, at the end of the day, you can't escape the reality that it's a poor fundamental business, it's a commodity business. So look, I think the main way for solar is going to disappoint is that competition is going to explode. I mean, competition, look, they're basically giving out free money, right, to make solar panels. And you think because people think, oh, First Solar's there, that they're coming out of the woodwork. I mean, just the amount of announcement we have that in my channel checks, over 52 gigawatts of new solar module manufacturing announcements since the IRA. That 52 gigawatt new announcements compares to today's base capacity of 8.5 gigawatts. All right, so you're talking about 7 times the amount of current capacity that's already announced, and that gets built in less than 3
being
years.
Announced by competitors, or are you talking
by competitors? Yeah,
competitors.
Yeah.
Okay.
Yeah. So people that are coming to put plants, and these are not people or companies that are doing solar for the first time. They're just international companies that now, because they see the benefit of being in the US because of all these tax credits, they're setting up shop here, so they're announcing new capacity in the US. So it's a tremendous amount of new capacity that is going to come online. So in my view, First Solar, yes, this is really good for First Solar, all these kind of tax credits and everything, but it's going to be very short-lived. When you see it model out like 15, 20 years of benefits that people are looking, it's just it's not going to be like that. The competition is going to come way sooner, and it's just going to make it completely commoditized, because again, this is not a technology. It's very easy to make. It's just a matter of like,
how long do the credits last in the Inflation Reduction Act for solar?
They're set. I mean, they're set. There's like $4 billion kind of for the entire package. So until that kind of runs out, and of course, if the Democrats kind of win again next year, then probably that gets extended, right? And there's more. But there's also the flip side, by the way, which is part of the thesis, which is the Republicans are very much against this bill. They try to axe it just now with the debt ceiling negotiation. That was part of it. They wanted to crush that funding for the IRA. So you already know where their mind is. Like if the Republicans take more power, maybe take the White House, kick the Congress next year, that's the first thing they're going to tackle. They're going to roll all that stuff back. None of that's it's expected, right? So we might see it sooner. I think it's like the competition is going to take 2 to 3 years to play out, but that's assuming that we still keep going in the same direction. If there's a change of regime, and all this stuff gets rolled back, then it's a disaster, a complete disaster. So that might make it even worse. I'm not even relying on it, but it is a very possible kind of.
But we know who you'll be voting for next election.
Depends. It really depends. I have so many things in my book that something benefit from one side or the other. So don't take this as the only.
No, I was just kidding around.
Of course.
So
but we'll see.
Yeah, I look. I think it's an interesting story, because your thesis is predicated on just like, this is the best it's ever going to be for this company, and it's not so much a knock on their current performance, but what's to come.
It's not sustainable.
It's not sustainable. So let's just to wrap things up, I'd love to hear a little bit more on LATAM itself. What sort of opportunities are you seeing down there? How do you think U.S. investors should think about LATAM? Why should it be an important part of their portfolios? I mean, are you seeing valuation discounts that justify the, let's say, corporate governance risk and other risks that are attached with investing in LATAM?
Sure. Yeah, so LATAM is obviously a region that I focus on a lot. As I mentioned, we have somewhere between 15 and 30% of our book in LATAM, currently around 20. But yeah, it's definitely a region that I've been building so I was basically our portfolio was kind of on the low end, actually maybe 10% at the beginning of the year. We've kind of doubled that to 20% exposure now to LATAM, especially to Brazil. So we're now I think Brazil and Argentina are the two countries that exhibit the best opportunities in LATAM. And the reasons are basically, in Argentina is very simple. In Argentina, you have an election, presidential election coming up, and Argentina, LATAM in general, very, very much influenced by the political cycles, more than anywhere else I've seen. You know, like who comes into regime really moves markets. And it's basically, you know, as you would expect, you know, left-leaning regime, bad for markets, right-leaning regime, good for markets. So right now, you know, Argentina is governed by the left, and you know, Argentina is running at triple-digit inflation. You know, 104%, I think, was the last print. So it's a very bad situation. People are tired. They want a regime change, and just historically, whenever there's a regime change in Argentina, if you look back in a very long history, from left to right, it's a massive boom in Argentina and its equities, you know. So I feel like, you know, we've already seen that in this year, you know, because of the expectation of a change. So maybe not as tremendous of an opportunity today as it was at the beginning of the year, even though we're still invested and we still believe that there will be a regime change and, you know, there would still be upside there. But what I'm most interested in right now is in Brazil, actually. Not only is it the biggest market in LATAM and the most liquid and the most accessible to investors, but it's also the best valuations. You're seeing, you know, the entire Brazilian market is trading around 7 times PE, you know, which is, you know, 2 standard deviation, you know, away from mean, just really, really cheap. And, you know, the reasons are several. You know, you have, after the boom from COVID and all the stimulus, you know, now you're seeing a credit cycle that kind of turning. Interest rates are very high in Brazil, so the overnight rate is 14%, which, you know,
wow.
it was basically to tackle inflation. You know, inflation in Brazil got to 12%. You know, so that's why they raised it to 14%. So it's a high interest environment, kind of crimping the economy a bit. And then lastly,
so why not? Like the 14% inflation matches their earnings yield.
no, but that's the point. The point is they got it to 14% to battle inflation, which got up to 12%, but that was March or April of last year. That's when it peaked. Today, I mean, yesterday, Brazil just reported its latest CPI under 4%. So they've already come down inflation from 12 to 4, much quicker than almost anywhere else in the world. They're beating the US even. And rates are still 14%, you know, so that's the point here where I feel like, you know, when inflation was 12%, it made sense, but at 4, it just doesn't make sense anymore. I think the central bank in Brazil, the most recent meeting in May, first, you know, kind of softened its tone a little bit. They've been very hawkish, even though they've been paused for a while. But, you know, they're not messaging a pivot yet, but the case to lower policy rates is just very strong today. I mean, right now, Brazil has one of the highest, if not the highest, real rates in the world, right? I mean, you're talking about 14% overnight rate with 4% inflation. You know, that real rate is one of the highest in the world. So I'm not going to say highest because, you know, someone's going to come up with some random country, you know, but it's one of the highest real rates in the world. So I think you win one of two ways: either the inflows into the real, the currency, the Brazilian currency, as people play the carry trade and want to kind of benefit from the high real rates there. So if you get those inflows into the high and you get that currency appreciation, you're going to benefit as a US dollar investor. So that's one way. Or most likely they're going to cut rates. I mean, they're just going to cut rates because to help the economy, right? The credit cycle already turned, so they know high interest rates are affecting the economy in Brazil and you know, loan growth, etc. All these banks, so they have a lot of room to lower rates and still be well above inflation and still be well into the positive real rate and not affect the currency so much, which is always a fear that these central banks have, to cut rates and affect the currency, you know, and hit the currency. But they have so much margin there that they can do that. You know, they can lower rates without triggering any meaningful currency depreciation. You know, so I think Brazil really sets up really well when it comes to interest rates more than any other country, just because of how fast inflation came down and how high interest rates are still in Brazil. So
Yeah.
the argument for
No,
lower rates.
you're a single stock guy, but I do like this dynamic here where you've got what sounds like a macro tailwind with a potential policy reversal. You've posted about BRF Foods on SumZero. Maybe just give a quick synopsis of what appealed to you about that name and how it relates a little bit to the macro view that you have.
Yeah. So it's interesting because I posted on BRF almost a year ago, but I think today it's extremely relevant. The timing is actually much better today than at the time. So I think it's a super relevant idea for people kind of review and check out again. So BRF is well, it used to be known, and it still kind of gets known as Brazil Foods. It's a Brazilian company. It's one of the largest animal protein producers in the world, accounting for, I think, like close to 10% of the global poultry trade. So they mainly produce chicken. So their revenues are split kind of 50-50 between commodity animal protein, most of which is chicken, and some of it pork. And then and almost all of that is exported. So it's an export business. And then the other 50% is the specialty meats, like frozen meals, cold cuts, other processed foods, which are mostly sold locally in Brazil through two very dominant brands, Sadia and Perdigão. All right, so you got the export business, which has a structural, low-cost, geographical advantage, just stemmed from being based in Brazil, right, where land is plentiful to raise the chickens, grains, which are used for animal feed, grow very cheaply in highly fertile lands, and economic, labor basically is highly accessible, right? It's cheap. So this cost edge is even magnified in time by having cost priced in the local currency, which is usually depreciating, and having the revenues priced in dollars, right? Because it's an export business. So that part of the business is really, 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 they have certain structural advantages there. And then on the other side, on the other 50%, which is the local side, which is where they sell processed foods and stuff like that, they have two very dominant brands. So that's a branded product. They have 42% consolidated market share in Brazil in their products. It's just they're extremely well known and trusted brands. So it's a company that has, in summary, just very long-lasting competitive advantages with just unquestionable strong production assets and highly valuable brands to drive earning growth for many years to come. So the problem is that, the main problem has been kind of twofold or maybe threefold. First, you got, again, we were talking just about interest rates. Higher interest rates, I mean, they're going to hurt everybody in Brazil, especially companies that are a little bit more leveraged, like BRF. So BRF, is a little bit levered, 3 to 4 times levered, depending on which EBITDA number you're using. So, they're up there, and a lot of their debt is floating. So, the higher interest rates are going to be bad for them. So as interest rates go lower, now, it's going to be much better for them. Secondly, and maybe more importantly, is just grains, right? So grains, that's like 50% of their COGS, what they used to feed the chickens, mostly corn and soybeans. And we know, grains have exploded, ever since a little bit after COVID with just the overall kind of commodity boom that we saw with many other commodities, grains as well. You had basically kind of the COVID, after the COVID-induced kind of supply chain issues, you kind of combine that with the La Nina weather phenomenon, reducing kind of the grain harvest in several regions of the world. And then in 2022, the Russian invasion of Ukraine, blocking of the exporting kind of ports for grains. Ukraine is the 4th largest corn exporter in the world, 3rd largest wheat exporter in the world. And also, it has a relevant use of the relevant player in fertilizer. So all this stuff kind of combined to supercharge the grain commodity cycle. And I think it's just a matter of like a perfect storm about to reverse. This year, we're finally starting to see grain prices start to crack. Why? Because, well, we finally have better weather. You can't have bad weather forever. So you had 2 years of extremely bad weather with La Nina. This year, much better weather. We had a warm winter in Europe and in the US, which helped kind of start the planting season earlier. Then in Brazil, you had also great weather. Brazil coming with its first harvest, record harvest for corn and soybeans. So that's actually, again, just increasing supply. The reopening in China that people thought was going to be a big demand driver, kind of like, we don't really know, it's a little bit weaker than people thought, right? So basically now you're starting to see grain prices come down. This is going to be very, very meaningful for BRF. That's the biggest cost, and they haven't been able to pass it through because the economy was a little weaker, and et cetera. So this is, again, you have going to have lower rates, right? Because you have rates at 14% versus inflation at 4%. That's not sustainable. So you're going to have lower rates. You're going to have lower grains because, again, all this stuff that happened that took grain prices to the moon, now reversing, normalizing, and it's going to help them a lot in terms of their margins, right? And then you have just the political situation in Brazil, right? Just like I mentioned for Argentina, that you have an election coming up. In Brazil, you already had it. You had it late last year, and what the result from it was a very left-leaning candidate won. So obviously that was very negative for markets. And not only is it left-leaning, but it's an ex-president, Lula, who is a very polarizing figure, and just, he likes to really stir the pot. He's just very market unfriendly. So people when he won and he took office in January of this year, the country premium for Brazil really went up because people just don't trust, him, and just the stuff that he's been saying. He wants to. I'm not even going to get into it, but it's just a lot of stuff that is just concerning. Let's put it that way. But what I see there as the reason I like taking the other side of that is that he can't do much this time around like he did in his previous regime because he doesn't control Congress. This time he won a very close election, but the right won the Congress. So he's kind of stuck there to where he's going to have to kind of compromise if he really wants to govern, So I believe this administration he's just going to be forced to have greater fiscal discipline than his previous.
Yeah, it sounds like what happened in America with Biden Congress. Yeah.
Well, that combination of factors, it really makes me believe that BRF, which is a company that's still very much down significantly from pre-pandemic, 60%, more than 60%, has an extremely long runway from here. So that's one of my favorite positions right now.
Daniel, I think that's a great summary, and I love your contrarian mindset, kind of going into these fairly dangerous zones. It's
not for the faint of heart,
It's not for the faint of heart, no.
Oh man, I think that's the hardest thing about my strategy is just the discipline to stick to it. That's it. Yeah.
Well, we will certainly follow up with you, and I'll be tracking those names. Obviously, I own Meta myself personally. But I think this is a fascinating discussion, and I think it's great that we covered both, three companies individually, but also some context of, the macro environment and geopolitics. So thank you so much for joining us. And
thank you. I really enjoyed it. Thank you for having me. I really enjoyed it. Yeah.
Thanks, Daniel.
Awesome. Take care.